Well, good morning to everyone in Europe and good early evening to people in Asia. My name is Daniel Widdicombe, and I'm extremely delighted to host today's panel on investment trends and actions as we go forward in the COVID environment. It's necessary for me to thank the LBS and the China Business Forum, and also to thank Professor Yue and Dr. Chu for a very insightful and interesting discussion just now. They've raised some questions that I think the panelists today, who are very distinguished, can answer in certain detail according to their expertise. For myself, I've recently concluded 10 years leading the investment bank activities for China Construction Bank in Europe. And prior to that, I was 18 years in Asia focusing on China. We have today Mr. Weimin Chen. He's the MD and head of China at Houlihan Lokey. We have Aman Wan, the partner and head of UK China business at KPMG. And we have Benson Tam, the chairman and founding partner of Venturous Group. And so we're going to be drilling into a lot of different subjects around this strategy topic. I would like to just say we're facing an unprecedented challenge, as we all know. We're in a situation that's not been felt before. Normally, we're used to a sector recapitalizing, or perhaps a country recapitalizing. But here we have every country, every sector needing to recapitalize at the same time as we go forward. Dr. Chu mentioned the stimulus program that China will have, maybe being 2 or 3 times larger than in 2008 because of the size of the economy now. And we're going to have a very interesting roller coaster ride. We've, for example, had already a false rally in equity markets, a 10% recovery. But when you look back to 1929, in that period, which was the worst depression, there were 7 false rallies before the equity markets finally stabilized. Even in 2008, there were 3 or 4 false rallies. So we're going to be looking at the sectors, the winners and the losers. We've got a situation where there are no dividends or they're being cut. We're having bond defaults. Prices may seem cheap now, but they could well be much cheaper later. We have had a flight to quality, but some of the usual safe targets have now been very badly hit themselves. So how do we react to it? How is the global coordinated response going to pan out? And how are we going to do due diligence? How are we going to integrate acquisitions going forward? These are some of the major questions we're going to discuss today. I'm very delighted to talk with Weimin, and I'd like to ask Mr. Weimin, could you give us some insight, as well as introducing yourself very briefly, bring some insights into the primary markets. How do you see the M&A and restructuring opportunities that are emerging in this current capital market situation?
Okay, hello, hi, good morning and good afternoon. Thank you, Daniel, and I'm very honored to be invited back to our London Business School and in the digital form. And I'm proud to be the graduate of a program in 1996 to 1998. So long time ago, but I think it's so nice to be on this forum. And, as introduced, I'm a managing director and head of China for independent investment bank, Houlihan Lokey, which is a global M&A and restructuring firm, advisory firm. And I think the topic of what you just mentioned is very interesting, and especially in the current environment, the COVID-19 and maybe hopefully not too long post COVID-19 area. The capital markets obviously very volatile. I think you see the up and down, in both credit and equity markets, in both China and outside China. Obviously, U.S. as a major, capital markets. People are all looking to how the governments behave and how the big corporates behave. And my job here at the Houlihan Lokey is really to cover Chinese corporates as well as Chinese financial sponsors. And we have seen very, very interesting developments. And I think, what I want to say is that the sort of things we are seeing, the sort of companies and the deals, transactions that is still happening in the past few months. And also I want to add a few, maybe 2 or 3, the underlying theme why this has never changed despite the COVID-19 and for Chinese companies. And I think, in the past few months, the team here in China, as well as our partners in global offices, have been very busy in the 3 areas of transactions. And the first of all is, the take private of U.S. listed Chinese companies. As everyone knows, there are hundreds of these companies for various reasons, and a lot of them is the tech internet companies, and they are looking to reassess their market situation, especially given the Sino-U.S. trade relations and the developments, and take private and come back to Hong Kong or Shanghai or Shenzhen for relisting. And we have seen a flurry of deals in that space. Secondly, we also see, not too long ago, we have seen a lot of Chinese companies, state-owned or private companies, looking to do outbound transactions and buying assets in the US and Europe. And right now, we are engaging, doing deals in terms of Chinese owners, having options of selling these assets. And last but not least area is really restructuring. And I'm talking about the cross-border, a lot of Chinese owned or financed businesses in, developed markets. And they're experiencing also this from the volatility and looking into their capital structure, looking into various restructuring opportunities. So I think, these are the really, I think, given the macro situation, and the stimulus plan, as the host also mentioned, I think both in China and the US and Europe, I think the market has the liquidity. And we will expect the deals in these 3 areas for involving Chinese companies will continue. And I think, from an investor's perspective, opportunities, in these prime market, the primary market deals, would also be, very unprecedented. And I think, that's why, a lot of funds in financial sponsors actually actively looking into these potential opportunities. And if I may, I just want to highlight 3 themes for these deals that's happening. And I think Chinese companies, as I mentioned, graduated from London Business School for more than 2 decades. I think most recently with this firm for 1 decade. And I think, the Chinese company underlying, ambition and potentially looking from the investor's perspective, maybe the theme for investments. Really, I would say, one is outbound. So you go out, the Chinese company, Chinese consumers will always have this desire, ambition, or to go outbound, go out of China home markets. And secondly, I would say is go within. I think the Chinese consumer market, Chinese companies, I think it comes in very different forms. I think the markets, is very, you have top tier cities, you have second tier cities, you have a third, fourth tier city, and then you have vast area of rural, countries. And I think, that actually translates into many different forms of the consumer markets. And for companies in China, abroad, this will present continuous opportunity. So go within. What I mean is that also the opportunity for various forms of companies. As people would know, Chinese company, you could be state-owned company, you could be private-owned company, you could be foreign-owned companies. All these three forms of ownership play major roles in Chinese economy. And
okay, thank you, Weimin. Thank you. We're going to continue these themes. I am going to now turn to Aman Wan and ask a little bit. He's an M&A expert based in the UK. Maybe we could hear a little bit on the backdrop of what's been happening in China. What's going on with M&A activities in Europe, between Europe and China now? What trends are you seeing? And what sectors are still seeing activity, if any?
Thank you, Daniel. A bit about myself. I'm a partner based in London of KPMG. I look after the cross-border investment activities, especially as facilitating Chinese investment into UK and Europe. And I'm really glad to see the encouraging messages from Weimin about Chinese outbound opportunities, which means I'll still have a job, hopefully, in the short-term future. My personal, we are talking about the post-COVID-19 era, but I don't think we can properly talk about it without looking at the before COVID-19 context. So the BC era, what happened there. If I may, a short summary of what we have seen in the last few years. The Chinese investment, according to Rhodium Group's data, the Chinese outbound investment in Europe in 2019 have dropped to a 5-year low to something around 11.9 billion euro. And that's against the backdrop of a peaked investment in 2016, we're at something around 37 billion euros. And the sectors we've been seeing most of the transactions in Europe are consumer market, healthcare, biotechnology, and the automotive sector. And UK, Germany, and France have been the leading big three forces, being the most interesting destinations for Chinese investment in Europe, with one exception in 2019, where North Europe has taken over the big three and being the largest investment receiving countries. And I give you an example. I'm personally involved in one of the major transactions from China General Nuclear, the renewable energy, clean energy investment arm of General Nuclear, China General CGN, in terms of their acquisition of a large wind farm portfolio in Sweden, and that's something close to 813 megawatts over €1 billion transaction. If we look at the UK specifically, similar pictures, but also with variations. In 2019, it also dropped to a 5-year low to something around 3.8 billion euros, and against a peak in 2017 of something around 18.5 billion euros. But I really see the 2017 number being an outlier statistically, and that's driven by a couple of major transactions. For instance, the logical deal by CIC, that's close to 13 billion euros at the time. But if you're taking that out, the numbers we are seeing now is probably revert to a 10-year mean number, as we've seen before. The sectors we've seen in the most attractive to Chinese in the UK are properties, energies, infrastructures, and financial services, but coupled with emerging sectors, that we can talk about later, such as healthcare, such as education. Now, moving forward to now, the after COVID-19 era, the AC era, right now, anecdotally, I was just talking about my work. All the several transactions that I've been involved in have been put on suspension, unfortunately. One's in education sector, the other one's in construction sector. Both of them has been either delayed or put on hold. I think the reasons behind that, the considerations behind that are twofold. From the buyer side, they are reviewing their credit lines, they're reviewing their financing models. Of course, the banks that supporting them will have a different view of their risk profile now. Secondly, they're also reviewing their investment rationales, the business case that they set up in the first place to make the transaction. Of course, both overseas market and domestic market are going through a paradigm shift. Thirdly, they are also looking at revisiting the valuation, of course, of the targets. On the seller side, they are very concerned about two things. One, execution risk. Can this potential buyer still put it off if we continue with them? Secondly, also valuation erosion, given what's going on now, because their financial data start to change, whatever in the VDD, in the data room might be revisited very quickly. That's in the short term. In the medium term, I believe, which is also being validated by a lot of contexts, both in China and in UK, that there will be, in my view, an arbitrage opportunity coming up in the short to medium term. And what I'm talking about 6 to 18 months time, when China has started to show early signs of recovery and seems to be coming out of the pandemic curve from the right-hand side. Hopefully, currently the business activities has come back to 70–80% level. Hopefully, that can translate into the confidence in the market, in the capital market, and hence liquidity in the market. While on the left-hand side of the curve, UK and European market and just getting into the pandemic, and the worst probably is yet to come. And that could be, that time latency could manifest in this window of investment, and foreign exchange, valuation, and most importantly, cash flow are the specific drivers for that. But in the long
term, thank you, Aman. I'm going to move swiftly on to, and it's a pleasure to have Benson Tam now talk with us. Aman, you raised the fact that your projects have been suspended, but China has reopened its economy. And Benson, what are we seeing in the Chinese market? How is it different from other countries? Are there any unique investment opportunities you've been seeing? Or is 2020 a complete write-off?
No, 2020 is not a write-off, Daniel. 2020 is the mother of all opportunities. We just finished a mega deal. It's all about technology, you can imagine. We are all on Zoom. It's all about digital infrastructure. Let me also remind people that Taobao was built right after the SARS period. Taobao was built and captured the opportunity right after 2003. The same has happened. For us as investors, we were, the best vintages actually were 98, 2001, 2003, 2009. And this time round, I think this is a major turning point in China. And people have asked me, what is the biggest opportunity? I would just say technology. Look at Zoom. Look at all the sort of online, everything that is moving on, right, Daniel?
What has happened to valuations during this period? And do you think as an investor, is your exit time frame extended? Have you adjusted, or how have you addressed that?
Well, I would say this. If you don't come to me at half price, I'm not interested, okay?
Right.
Everything is coming for half price. Of course, this is half price of a very, very peaky, very frothy valuation in the last 1 or 2 years. If you look at a lot of the AI, the digital infrastructure, I would say that we've been sitting on the sideline for quite a while. Right now, just like in all the other crises before, this is a good time. This is the time when the people with the best balance sheet, if you look at KKR, you look at some of the other ones, they are very, very actively buying in the market right now. I think people have already recovered from the shock. And I would say that some of the investors are starting to move, Daniel.
I noticed that when President Xi Jinping recently went to Xi'an to Jiaotong University, he was recorded giving an informal chat with the professors, which is very unusual. It's about a 10-minute chat. And the confidence that he was exuding, and you were talking confidence, we've mentioned this crucial word a few times today. It was very clear that he felt that this was an opportunity and a time to move forward. So, for example, the major telecoms companies in China have plans this year for new infrastructure to roll out 5G base stations. 550,000 5G base stations will be rolled out over 300 cities. And presumably you're seeing that in different parts of the technology chain as well. Is that something you've looked at closely?
Daniel, yes. I mean, remember what happened last time in 2009? There was a huge QE in China as well. So they put something like $4 trillion to work. Where did they put it to work? They put it on a high-speed rail.
Yeah.
What has happened? We all saw what has happened. When you throw that sort of money around and you start to build infrastructure, in this case, it is digital infrastructure, this is going to provoke a lot of new stuff that's coming through. Let alone the other big thing I always say to people is, I'm sure everybody who is listening to this is a user of Alipay, is a user of Tencent Pay, correct? Right? I'm sure you use it as well, Daniel.
Yeah.
And Aman and Weimin. Now, have you thought about this? Something magical happened last year. Everyone, every single transaction, literally everywhere in China is done on those two payment platforms. Now, have you thought about what that really means? It means that 100% of almost all daily economic transactions are now transacted online. So I've been saying to people that I think actually China was the first one to be what I call the old digital economy, starting with Alipay. My RMB has been sitting in my wallet for the last 9 months. It hasn't moved a bit. What it really means is that it's going all digital. This is the only country in the whole world that it's all digital. Now, you then talk about 5G. You then talk about AI. You then talk about big data. You then talk about cloud. You then talk about e-commerce. You then talk about logistics. And then you compress the whole thing instead of, I thought this is going to take 5 years. No, Daniel, I think this is going to take 5 months. So this is the moment in time. And I'm very certain that in 10 years' time, when we look back, just like when we look at 2009 and we look at 2003, when you saw Taobao coming out, this will be the moment, right? I think Aman and Weimin, you are exactly saying the same thing. You know, things are moving on, right?
Well, I think that's exactly right. I have friends in China who have not used cash for 3 years. So in fact, if anyone has not used cash for longer, tell me, because I'm keeping a record of who is going to be the winner. Absolutely agree with your sentiments. And our session has been extended slightly, and we've got time to move around with some Q&A that's coming in from the audience. And I think the first question is for Weimin. We talked about valuations in China, but what are you seeing the impact on valuation of European assets when Chinese are doing outbound acquisitions? So are they all chasing a deep discount now?
I think, Daniel, I think, valuation-wise, I think, we see actually, fairly, on transactions, fairly reasonable. I think for a solid, with a fundamental logic of this business, you don't see valuation tumble by half as Benson suggested. But I think if you compare the price you want to pay with the sort of price that people paid a couple of years, 3 or 4 years ago, as Aman suggested in 2016, right? That's the peak of Chinese outbound investment. Yeah, probably more than half. And don't forget, those money that has been paid not by equity, a lot of them is by high gearing, borrow a lot of money. And this will hit these owner or sponsors of those transactions very hard. And that will trigger wave of these deal opportunities. And so I kind of agree with Benson's indication pricing wise, but don't forget, this is because those buyers, so many of them from China in the first place, paid a too high price. And that's why,
yes.
that's why we don't advise our Chinese client, even in the heyday. You want to look at the fundamental, you want to look at the strategic angle, and you pay slightly more, maybe 20, 30 to a buyer from Holland, maybe, for a German asset, rather than you pay double. So I think this has never changed, I would say.
Yeah, I would say, Weimin, I totally agree with you. I want to put another point there, and this is a good news for you and for Aman and frankly for Dan. In crisis, who wins? The one with the biggest balance sheet. Okay. Right now, there are other investors like me who have fresh powder, gunpowder. And look around the world, who has money? It ain't the US, it ain't Europe, okay? The biggest balance sheets right now are in China. So like it or not, BRI, whatever, I think whoever has the biggest balance sheet wins. So that's why I think I agree with you, Weimin, and I agree with you, Aman, is that yes, we should advise our investors to pay a reasonable price. But guess what? We may be one of the few who are actually buying right now, right?
Well, I think it's also worth mentioning that the category of investment company that we were just discussing, Weimin and Benson, could well be very different. Benson, I'm not sure how early stage you invest, but the earlier stage you get, the more price leverage as an investor you have, because the future of the company depends on the capital coming in. Whereas I believe that Weimin was referring more to large, established, cash flow generative entities around the world that aren't in the same position. They have the luxury of talking to different kinds of investors.
I'll tell you this, Daniel. I do both. I don't care. In '99, we were the first round investor in Alibaba, and we held it for 20 years. And we were in every single round subsequent to that, okay? This recent big deal that we did is basically a pre-IPO round company. So I guess what I'm really saying is that it's not about the check size, it's about the strength of the company. And right now I can be very, very choosy. I can just pick the prettiest girl. So I just pick the best company. So I would say that just like what you said is that number one, it's the strongest who are very active now. Number two, it is actually, shall we say, the best that are surviving now. I think what would happen in 2020 is that it would be almost like a what do you call it? A extinction event. A lot of weaker companies will die. Companies who should have died a lot longer before. Instead, the best companies will get funded, right? I've seen already in the last 2 months, despite the COVID-19, we did the deal in 2 months, all on Zoom and Tengshun Huiyi and on Dingding. We were not there. We were only there for a week, and my team were on lockdown for 14 days after going to the company. And despite that, we can do it. But how many can I do? One perhaps, right?
Yeah. That's right. Well, due diligence and integration, post-acquisition integration, are going to be very challenging for the next period as the different countries start their walk out of COVID lockdown. Shifting the topic a little bit, we have a question from the audience to Aman about the changes in the regulatory position. So you have European countries and the US raising the barriers to investment from Chinese companies. And at the same time, you have China rapidly accelerating certain aspects of its financial liberalization. For example, yesterday, we had new rules on QFII and RQFII, increasingly easy to attract people to come into China to invest. What are the trends that you're seeing there, and how will it affect Chinese investment internationally and into Europe?
Thanks, Daniel. And that's a very challenging, good question. I think on one hand, I think attracting foreign investment into China, deregulation in China, further opening up and reform is very positive news for the world. And it also shows China's leadership in the international arena. On the other hand, when we look at Europe with the US, I think there is an increasing political, let's say, negative comments or noises that seems to be driving more towards a protectionism, some decoupling noises from China. I think UK, there are some politicians with similar voices. But in recent conversations and seminars with the Chinese ambassador here in London, Liu Xiaoming, and also with the newly appointed Lord Grimstone, who is serving as the business secretary on the Treasury. And their open view is UK is still pretty much very open to business with China, and they're looking for a more sustainable business relations with China. Having said that, though, as every government, they would want to protect their basic fundamentals, their assets, and the benefits to the country, to the people, and that's very rightfully so, and that's understandable. So in a crisis like this, if my medium-term projection about short-term arbitrage opportunities do eventuate, some of the hot monies from Asia, from China, do look at the asset in Europe differently. And naturally, those governments will put those investments under review for national security or for whatever reason that needs to do to safeguard the proper value of the assets. So so that the market's not being wrongfully leveraged. And that's the right thing to do, in my view. And sooner or later, we will reach the equilibrium as we see. So that's why there's a shorter window. And when you translate that into the specific day-to-day operation of investors, what it means is the first wave of investment in that medium-term arbitrage opportunities will be something more around the sectors like Benson has mentioned, the technology-based companies, the IP-based companies, the content-based capabilities in Europe, where they used to rely on cash-rich funds or banks, leverage credit lines to survive, to burn the cash to fund their R&D. And that's no longer the case. And whoever has the new cash coming in, they will have to jump on it, given whatever the cash flow problem that they are facing. However, the traditional sectors we have seen between UK and China, energies, infrastructures, those massive major deals with longer term returns and perspective, countries will definitely protect the value, as we mentioned. Also, the increasing political country risk manifested in potential nationalization, for instance, that's an extreme case, may put the investors at bay for a moment until that risk becomes clearer. However, the longer term trend is once all this BC crisis has settled down, the market fundamentals, I believe, will prevail, and that the traditional, that what we've seen in the last 10 years or so will come back to the play.
Well, thank you, Aman. On that point, with the raising of barriers to invest into, for example, the US, Weimin, one of your areas of focus is delisting Chinese companies in North America and then relisting them or privatizing them or relisting them in Asian markets. Do you think this, and that trend's been going on for a while for various reasons, is it going to really accelerate now?
I think so.
Daniel, yes, I think it will accelerate. We already been, as I mentioned, busy with these sort of transactions. However, I would say that the drivers for these deals, these transactions, not only because of COVID-19, not because of Sino-US decoupling, so-called, but also of the fundamental, reasons within the companies. And they have desire to, come back to China, access the capital markets here, get more name recognition from their customers. So I think there are fundamental reasons for that. And if you look at the list of these candidates or people in the market who have done these deals, it's all solid or, in a better shape than many others. Right? And I think, so we do see more deals and this trend will continue.
Well,
yeah,
one of our audience, oh, go ahead.
Just like I saw the other day, so JD is coming back, okay? Jingdong is coming back. I mean, for me as an investor and big shareholders in these companies, I would just say, how can you be listed on a hostile market?
Yeah.
Honestly, nobody can survive that. It's that's why you saw Ali rapidly listing in Hong Kong about right after the trade war started. That's why they knew they were next between the crosshair, right? So Weimin, I think absolutely true. I think a lot of people would need your services and Aman's services in terms of rethinking everything. For me, like I said, I think it's not about just, I saw some questions about fintech and technology and new consumption. I think the question right now is that when you see an all digital economy, it's not that it's just technology, it's just transformation. It's all change. Where you list who is buying, what price, traditional companies adding technology company going into experiences and stuff like that. But I think this COVID-19 really is accelerating, and people are now completely rethinking about how do we do business, how do we work, how do we live, how do we play, right?
Yeah, we also have, of course, the fact that 10 or 15 years ago, Chinese companies went overseas to get a higher valuation. And now they can get a higher valuation in their domestic markets than they can, for example, on the London Stock Exchange, and to some extent on NASDAQ and the New York Stock Exchange. So that's another factor on top of all the others.
Daniel, I think the what's going to happen is not a one-way traffic. I think it's not that. We will be surprised to see that they are continuing younger Chinese companies. They may not be able to access the domestic IPO market, but you will continue to see IPO opportunities in the US. But then, in the same time, you will see those candidates coming back to China, to Asia, Hong Kong market. So I think two ways, and I think don't forget that the capital is actually very international. I think there is not so much Chinese capital, US capital. It's the people who are, or the government or the regulators who put on these restrictions, put on these hurdles that may hinder the development of the capital markets and the companies that who need a healthy market from that. So I think going forward, post COVID-19, we do see more companies coming back, but we will also see companies go to US. So I don't see that that door is already closed at all.
I think the short term, Weimin, I have to respectfully disagree with you. I think people will be very desperate to try to list a Chinese company in the US right now. But I agree. If they have no choice, not in China, not in Hong Kong, yes, they will, of course. But I think sort of the political headwinds, let's not underestimate that. Like I say, I think everybody is in the boardrooms. What we're saying is that we are almost as an emergency revisiting everything that we used to think of as no need to think. We are rethinking. So it's fascinating because the transformation means everything is changing, which is why I think sort of Aman, what you said is so true. Weimin, what you said is so true. They need professionals to help them think through this.
Well, I'm reading some interesting Q&A questions. I'm not sure if when I read them, my camera still shows up. But there's a question here for Weimin. and it's about covenant waivers and repayment holidays. So have you seen, and are you seeing, in fact, for all the panelists, are you seeing a massive increase in requests coming from the borrowers? And on the technical side, how do you balance the lender interest and government subsidy support in a restructuring scenario in China?
Yeah, Daniel, I think it's a very good question. And I think this, we focus on these companies that in the kind of, I would say, cross-border companies. So Chinese companies listed in the US or listed in Hong Kong. So they borrow US dollars. So we don't deal with purely domestic companies who borrow RMB from banks. But to answer your question, yes, I think you will see the news. You will see some of the deals may not be yet in public market. But I think the lenders, I think two types of lenders, right? Banks, institution, also the capital market investor, hedge funds, all that. Their behavior is very different, especially in the market like this. So I think the government's plan, their stimulus plan, how that translate into these borrowers is a very difficult to say. And I would say that for our focus group, the impact is minimal. I think the stimulus plan more apply to more wider audience. But for companies in the past who could be in the position to borrow few $100 million and raise these credits at a very high, junk bond yield. I think these requests come in because they have really repayment issues. So this actually present a lot of opportunities, not necessarily for us, because I think Chinese companies, many of them behave also differently. They may not necessarily come for a restructuring or renegotiation. They just, do it their way. So I think, yes, you will see a lot of these incidents, a lot of cases may not necessarily be turned into planned transactions. Yeah.
I noticed that even along the Belt and Road as well, the China Development Bank has been approached by a lot of the recipients of funding, and it's had quite a soft tone. It hasn't said, no, we're going to immediately enforce all the covenants. It's actually said we'll negotiate and extend and look at a soft approach for that. So that's quite interesting. The attitude.
Daniel, I just realized all three of us have been talking about where the opportunities are. I'm curious to listen to you, Daniel.
Yeah.
Yeah.
Well,
opportunities.
Sure. I think that I want to embrace the theme that China as the first digital country has really paved the way and is showing us the route to our own development in Europe. Only Sweden has a cashless society. About 87% of transactions are non-cash. So I would definitely be, as a government and as an investor, I would be focusing on the new growth areas. For example, high-speed rail in the UK is a travesty. We spent 15 years trying to do a 300-mile high-speed rail route. And then in the same period, China's added 20,000 kilometers of top quality high-speed rail. So I would look at infrastructure. I would look at AI technology. And one of the questions from our audience is specific to the UK. What do we see the opportunities for AI startups and tech companies in the UK? And I would notice that, or I have noticed, a lot of quality companies coming out of, for example, the Oxford-Cambridge hub.
Absolutely.
The UK is very good at research and development. It's not so good at commercialization. We normally have to hand over to the deep-pocketed players in the US to commercialize our inventions, like the internet, for example. But I would look at those areas to answer your question.
Great, Daniel. I mean, we haven't even started on the digital currency that China is launching this year. I'm almost 100% sure they're launching that. And when that comes along, that's a complete game changer, because behind that, they're using that to launch blockchain, not Bitcoin.
That's right. So yeah, the People's Bank of China has announced.
Right?
That's right. PBOC has announced it's going to be rolling that out. And so Facebook, of course, is with Libra had the setback that, first of all, governments around the world said, we're not very comfortable having a organization control currencies. And secondly, many companies like Visa and others retreated from Libra. So that actually emphasizes the point you made very early on, Benson, which is China's already massively taking advantage of this period of inaction or stasis or political divide in different Western countries to push forward on its longer term targets, which makes I think any emerging market investor extremely interested to be involved in China.
Yeah.
Now,
so I mean,
we have 1 minute left.
To
so please,
off, Daniel, I think, like you said, fintech, blockchain, and frankly, as I say, any of these, we haven't even started. This is going to be massive, just like what you said.
Yeah. Well, I want to thank the panel for a very interesting discussion. It could have gone in many different directions. So many questions to continue to answer. And all I can say is Weimin, Benson, and Aman, thank you very much indeed.